Hi, you're watching Investor Insights, and in this video I'd like to talk about real estate, more so real estate investments. Personally, real estate at this point in time in this country is not a good investment. By which investment I'm talking about rental properties, because your principal place of residence is not an investment and will not provide you with an income. You can say it's an investment in that if you live in it for a year and you can flip it, it's going to be tax-free and it will provide you with some capital gains if you're lucky in a rising market. But then again, you're flipping houses. That's speculating. It's not finding a principal place of residence. There's a huge difference. Now, when it comes to rental properties, the problem in this country is that real estate obviously is overpriced. It doesn't matter what capital city you're in or whatever major township that you're in, it's overpriced. And what governs this, or how can you tell it's overpriced? You look at rental yields. You look at inflation. So if you look at the median rental yield for a house in Sydney being 4.5%, and inflation, I'm talking real world inflation running at 5 or 10%, it means that your money is actually losing you, your investment is actually losing you money, and therefore it's not called an investment anymore. And this doesn't take into account your costs in acquiring the property, your costs of maintenance, your cost of repairs, and the cost of keeping the asset. Things like land taxes and council rates, so forth, so forth. And I'm very often asked, well, I only know real estate and I only want to invest in real estate because I don't feel safe putting my money anywhere else. Where should you point me to? And as much as I say I wouldn't, if I had to give an answer to that question, it would be more the commercial space. But even this is a dangerous game, because commercial real estate in a weakening economy is just as suicidal as anything else. But the one good thing about commercial real estate is that the yields are better than residential real estate. So if you're lucky in a regional centre, forget the capital cities, the yields are pretty low there too. I mean, you'd be lucky to get 6.5%, 7% in Sydney. Still better than 4.5% for a house. But if you go to a regional centre and you look very carefully and you look at something that is manageable even during downtimes, you will look at maybe 9 or 10% yield, sometimes a little bit more. Keep in mind, when I talk yield, I'm always talking gross yield. So you've got to take into account all the acquisition costs and maintenance costs and cost of keeping the asset. When you factor in inflation, you're going to lose money. Because any investment out there, aside from commodities, is not going to get you a higher rate of return than real inflation. But as I said, if you have to put money in real estate, you might as well look at the commercial space. Be very, very careful though. I mean, I've been walking around Surfers Paradise and all I've been seeing are empty shop fronts. And this place is supposed to be amongst the happiest places on earth. But even in the heart of Cabo Avenue, there's a mall which I think has been empty for the past 20 years. And that's within the heart of Surfers Paradise. So commercial real estate, although it's better than residential real estate, and if I had to put money in real estate, it would be commercial real estate, if I was going to put money in it. It's just a hard game. But as I said, if you have to do it, I wish you best of luck, and I hope you've done your research.